Welcome, everybody, to the Chinchilla Pickin' Podcast. It is April 7th, 2022. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am here with Brandon Beaver. Brandon, how are you?
I'm doing good. How about you?
I'm doing well, man. I'm doing well. I'm tired right now. I'm worn out. I have a lot on my plate. A lot of traveling for me the next couple of weeks. We're gonna try to make these podcasts fit them in between stops, but yeah, a little tired and worn out. It's not gonna get any better here. Oh, and I cracked. So I've always made fun of people, right, who crack the screen on their phones.
Did you crack yours?
I cracked mine, and because I have all these trips coming up, and I got so much on my phone, I can't get a new phone just yet. Right, I'm probably gonna do it maybe in between the trips coming up a couple days to where I'm in town getting ready to go back out of town again. I'll probably switch out then, but as of right now, I got to spend the next week looking at cracks in my phone, and it's annoying.
I haven't cracked a phone in a long time, knock on wood. I'm the most clumsy person alive, and somehow my phones tend to survive. I even went almost an entire year without a case. Almost an entire year without a case. I went, and I just, maybe that was luck. I don't know.
I've gone 4 years. 4 years of no case.
I despise cases on phones. I don't like this. I've got an OtterBox right now. It makes this thing so bulky. Why they've not invented something that's thinner that can handle, drops. I don't know. You get an iPhone out of the box. It's so thin. It's so cool looking. It looks so sleek. Then you got to put one of these stupid cases on it that aesthetically just ruins the iPhone and the Samsungs. I don't understand why they haven't made something that looks better than this, but whatever.
Yeah.
Or invent a phone that doesn't break. Even if you have to add the cost to it, even if it costs me an extra like $600 or something like that, I think a lot of people would buy a phone that doesn't break. The technology exists.
No, you'd be surprised they wouldn't. Motorola made a phone that didn't break.
Yeah, but it was Motorola.
Yes, that's okay. I'll give you. I
had a Motorola like 10 years. Well, not 10 years ago. It's probably like 15 years ago. I had a Motorola.
Yep.
And the introduction when you turn it on is the most annoying thing ever. The hello Moto. I wanted to break it every time I heard that.
All right.
So I have a Razor. Jerk. Motorola Razor. That's what it was.
That was a long time ago.
Yeah, maybe it was like 20 years ago. I don't know what it was, but whatever.
When
you start getting older, time just kind of blends together.
Right, it feels like it was yesterday, but it was like actually 2005.
Yeah, I know. Back in my day,
I always say things by weight now. Yeah, I think I was about 220 back then. Was that? But maybe that was my 240 range.
40 pounds.
Or I was about 200. I don't know.
Or stock market back when Exxon had the largest market cap.
Back when I was traded in Lehman Brothers. Anyways, what do you say we get going, huh?
Okay.
All right. I mean, we're on a good track here. So rules. Brandon and I get together before the show and we tell each other what we're going to talk about. We do not discuss it. You hear the live discussion here on the show. As always, we ask that if you're listening to this and you like the show, go ahead and hit that subscribe button for us. That way you can always get notifications when we have a new podcast released. And then leave a review if you like it. Let other people know why you like it. And then that's how we grow organically. All right. Mm-hmm. Brandon, you have the most to go over, so we're going to let you start first. I got a few things I really want to say later on, but we'll let you start. Yeah, you said you had a lot on one certain company, so I'm going to let you go.
Yeah, a lot on one certain company, but we'll talk first about the yield curve inversion because it's why I have a sour mood on the stock market. But I am buying something here, so I'm not allowing my mood to really affect my investment. But I do want people to start building a cash position. If you don't have a cash position right now, I understand that inflation is a scary thing and that it's eroding the value of cash. But the Federal Reserve's planning to unload $95 billion of its balance sheet every month this year, starting in May. Now that's roughly $1 trillion of the Fed's $9 trillion of assets on its balance sheet. So it's 1/9 of it, which is crazy. The $95 billion a month, and that's only 1/9 of what they have. But this is going to start in May. And I'm telling you right now, if you don't have a cash position, start building one right away, because their motive is to put a cap on inflation and decrease the inflation. So the cash that you have right now, at some point, if the Fed gets their way, is going to be worth more than it is today. So that means that you're going to be able to buy stocks at a lower value at some point, most likely, if they get their way. And buy goods and services, oil and groceries and all those things will hopefully be cheaper sometime in the future. Now they've been behind the curve here, so who knows how that's going to play out, but I wouldn't bet against the Fed. And I do think that we're going into an economic downturn of some sort. I don't think I'm not predicting a 2008 style recession here. We're just looking at 2 quarters of declining GDP. We may get past that pretty quickly. Who knows? But the yield curve inversion, the 2 and 10 the treasuries, the 2 and 10-year treasuries did invert twice over the past week. And the yield curve inversions have predicted a recession each time it has happened, albeit with about a 1 to 2 year spread usually, as far as years go. So it's usually 1 or 2 years out that the recession happens. But every single time this is inverted, we've had a recession in the past 50 years. So pretty reliable indicator here. So this is why I'm telling you to start building cash. If you don't have it, start it today. As soon as you hear this podcast, and next time the market opens, start building some cash up. All right. Now, a lot of the times after an inversion before the recession, the S&P 500 actually increases in value, but that's history. We don't know what's going to happen this time around. Start building cash. With that being said, today I bought FedEx, and a big headwind for FedEx would be a recession, right? They get a lot of their business comes from retail companies right now, doing ship from store models and e-commerce and all that stuff, and of course that would start to slow down if we had a recession. But December 2021 was the most profitable December in FedEx's history, despite Omicron affecting volume. A large portion of this over the past year, they've had 19% in price increases. So sales have grown 21% over the past year, driven mostly by 19% in price increases. But part of the expenditures here that they're having to deal with, that a large portion of FedEx's capital expenditures have been because of oil. And I believe that the price increases in oil will be temporary and due solely to temporary headwinds like the Ukraine war and all that. And go ahead, Dave.
I don't know if you can see, I've been trying to jump in here. So Brandon, for those of you just listening, Brandon and I have this video on Zoom, and I keep trying to raise my hand, lower my hand to get his attention.
Sorry.
And he's ignoring me.
I had you hidden behind my notes.
He's completely ignoring me right now. But so first thing, yes, as you're hitting a recession, I partly agree with having some cash on hand. You do need to have some cash on hand. That goes into something I was going to talk about later, but I'm going to use an example now. Is like, I've made a 20% profit in Meta based off our discussion we had on the podcast a while back, and I'm going to take that position and I'm going to close it out and take that profit to use, because I believe that some of the companies that I love and I like and I think are going higher are going to drop, and I want to buy them at a lower cost and make even more money. So to say that is, I'm also looking for deals, right? Mm-hmm. I'm not just going to sit on my cash. If I believe a company in long term is going to pay off for me, and I know in the short term it's going to drop, I'm going to use that cash to go ahead and build those positions. I'm not always going to sit on that cash.
So that's why I bought FedEx today.
So you had the same kind of thought. Okay.
Yeah.
So I didn't know if you were advising people to like just just sit on cash throughout the recession. I'm like, well, I kind of disagree. I agree. Create some cash now, but use that cash to buy in on companies after they dip, because they're good companies that are going to survive and come out the other side better.
You have to go where the numbers take you. And you kind of have to set your emotions aside. Like I said, I'm sour on the market right now, but I kind of have to push that aside and look at FedEx right now. I mean, they've got a 69% gross profit margin. It's well above my 40% rule. Net margin needs some work. It's only at about 5%, but I expect this to increase over time. As I said, I believe oil prices will continue their long-term downward trend.
Well, and that's another thing where, again, I want to jump in, and I agree but disagree with you. Oil prices will come down in the short term, hopefully, because of all there's more news coming out, Russia, Ukraine, and those things are going to be worked out. But remember, you still have the issues with Saudi, and they don't have control of all of their oil fields right now. And then that we're not pumping out as much as we were before this current administration. And so you have to take our U.S. rig count at 680 or something is the last time I checked it, versus 1,600 what it was. And then the fact that Saudis don't have control of all their oil fields, that has nothing to do with Russia, Ukraine. So those are still headwinds as far as oil price.
And we still have the travel season coming up, the summer travel season, which is likely to drive oil up again. But I think it's a short to medium term situation here. And I think that the oil companies believe that too. I think that they're trying to get as much profit in right now while they still can.
Yeah, and it's going to come down, but will it come down to like below 75 a barrel? I don't know, man. I don't think so.
I didn't think we'd be back below 100 a barrel this early, though. And here we are sitting at like 98, 99 the last time I checked today. But
I mean, that's based on the market believing that, Russia and Ukraine is coming closer to an end, and Fed reserves we're pumping our oil reserves into the market. I mean, there's a whole number of things that are going along with that. But yeah, like I said, even with that, we still have these other headwinds I mentioned, which oil is not going back down to $50 a barrel. That's not where it's going to be headed.
At some point in time, it might. But
yeah, at some point in time, but right now, no.
Yeah, probably not in the next year or two. Okay, but return on equity for Federal Express, FedEx, is 20%. That's above my 15% rule, so we're good there. Sales have grown 21%, as I mentioned, in the past year, albeit driven by 19% in price increases. However, this is expected to continue to grow faster than their expenses, as it has in the past year. FedEx benefits greatly from the new era of e-commerce retail, and this fits greatly in with some of my other buys in this theme that I'm going with, the future of retail, as far as e-commerce and all of that goes. We are down greatly from its all-time high closing price of $314.81. We are now trading at $203.77. This was a classic Brandon buy. I bought this after hours today, which I love to buy stocks after hours. It's just, you're kind of outside of the market noise and, outside of the distractions here. Plus, I love to put in limit orders and see if I can nickel and dime somebody. Oftentimes, people make a rookie mistake of putting in market orders after hours of the stock. So if you put in a market order after hours, it's a bad idea to do that, by the way, because there's low liquidity after hours, and you get somebody like me who does care about getting $1 ahead of everybody else. And I put in a limit order of 202 and, just to see if I could get it. And I wound up getting a 10-cent advantage.
Yeah. So one quick thing on after hours and pre-market, since you brought it up and you entered that realm. I'm not a big fan of trying to nickel and dime. If you think company's going up, buy it.
Yeah. Well, I mean,
and that's go ahead, man.
It's a head start of somewhere. I just
okay.
I'll take what I can get right away. And if I can get a discount on it, a lot of people, for some reason, new people that maybe they don't know what they're doing, they'll go and they'll put a market order. And then the first thing to trigger will be an order for a lot less than what the mark is on the stock, what it's currently trading at. So if you go in and you put in a market order on a stock that's, trading at 2 or 377 and executes at $200, sorry, somebody like me put in a limit order trying to get, an extra $3.77 out of it.
And I would give you that extra $3.77 because I'm going to make 70. Yeah. That's how I look at it. I just go back to I knew a new trader. He was a new trader, new stock trader, and he was trying to nickel and dime Micron technology on this trade. Mm-hmm. And it was trading at like 27 and change or something, or 26 and change at this time. And he was like, if I could just get it at 20 cents lower. And he was trying to wait for it to drop before he went ahead and put his limit order in and all this, right? It never dropped. It just kept going up and up until it hit like 45 the next week. And he was so upset. And I was like, dude, it's because you're looking at so tunnel vision and minuscule in your view. You got to understand, like, if you thought that was a good company, then you should have just bought it.
Yeah, well, I was going to buy FedEx anyways. So what I like to do is I like to put in a market order for like a few dollars less, give it 5 minutes, see if it triggers, then up my limit order, or not a market order, I'm sorry, limit order, but then give it 5 minutes and then up my limit order a little bit and then just keep upping it until I get to that mark, and then whatever triggers. But
that's one way to do it.
Get a head start.
That's definitely one way to do it. But I mean, look at me on the show. Like, was it 2 weeks ago? I said, hey guys, blink if you believe in, that oil's going to go higher, and, you want to get in a company that's going to benefit from a higher oil prices. Blink was trading at like 21, 22. And I said, I personally would probably going to wait for it to drop down a little bit, but who knows? I say that now and it's going to go up to 40, right?
Yeah.
Didn't go up to 40, but it went up to 28. I missed like a $6 run on the stock. And it ended up I would have made like another 25% off the company if I had just bought.
Yeah.
And that's a mistake I made on the show. In fact, that I publicly said that and I didn't buy, and it still went up. And, I missed out on 25% return just because of, I didn't take my own advice. So I don't know. I get what you're saying, and I like it. One other thing is that if you buy in the aftermarket and you sell in the pre-market the next day, I don't believe it takes away from any of your day trades.
Is that true? I didn't know
you
that.
Might have to look into that. I have a few friends of mine that have said that. See, it doesn't affect me anymore, but it used to. I used to have to keep track of my day trades. And so if you're a new trader, you're probably like how I was, where I had to keep track of how many day trades I made. That's something to keep in mind. But anyways, FedEx, man, FedEx.
So FedEx forward PE right now is around 9. That's compared to the forward price to earnings ratio of the S&P 500, which is around 20. So discount to the S&P 500. I think the transports and the courier services, which is the group that FedEx belongs to, is trading around a PE of 12 or 13. So of a forward PE of 12 or 13.
So is it just the numbers? Is it just the fundamentals of FedEx here? Is that what you're looking at? Or is there a transportation? Because that's the question I wanted to ask you. And I asked you in the beginning of the show was, if you're looking at just transports, why not UPS? Why not Northern, Southern, the train? Why not one of these other companies,
Well, mostly because FedEx is trading at a steeper discount. That's my reason. It's a steeper discount as far as price to earnings ratio goes.
So it's the fundamental numbers.
It's literally the numbers. Yeah.
Gotcha.
Now, one of the things that I was looking at here, because FedEx clearly benefited from the pandemic and the after, and even the reopening, because, all the retail companies reopening and wanting to shift to e-commerce and all of that stuff. FedEx really benefited from all of that, greatly benefited from it. And so I was a little concerned here looking at the trailing PE. It's 10.71. And are their past earnings going to be higher than their future earnings? And if that's the case, if that's what's expected, the forward PE would be higher than the trailing PE. It's not. The trailing PE is actually higher. So that's good. It's a 10.71. Now, if we increase this to a price to earnings ratio of 13, which is right around where the rest of their peers are trading, and I think this would be a fair value, this would put the stock at $299. This is a 47% upside. Now, I'm not sitting here and guessing that the stock will have 40% or 47% upside within the next year. It very well could, but outside of a possible recession, earnings will grow as e-commerce trends tend to normalize and start to grow again. And I think this is actually a pretty decent estimation of value here. So I'm just saying right now, I think $299 is actually the fair value at where we sit right now. And you're getting it at a 47% discount. So I think it's a good deal. This is another reason why I bought into FedEx. It's another reason why I put my emotions in the market aside. I said, hey, this thing's already decreased enough to where it's a good value. Go ahead, Dave.
Do you have a timeline on that, or are we just looking for the market to actually reconfigure? Because if you and I are both in agreement that we are going to have maybe a quarter or maybe even 2 quarters of decline in GDP, then that means that the overall stock market's going to decline, and that means FedEx will decline. Yeah. So what timeline are you looking at here?
So no, this is not a short or medium term trade. This for me is just a value play. I oftentimes have a hard time on my value plays, my long-term investments. I have a hard time putting timelines on them. I just wait for as long as we're on the right track with the company and earnings are still looking good like I expected them to every quarter, I just wait for my expectation to materialize.
Gotcha. Which is good, and your portfolio is growing over time.
Yeah,
and that's the key. That's the goal, right? Is us to grow our portfolio better than what it would have been had we given that money to a mutual fund or a hedge fund or something. We need to beat them all and show them that we can do it ourselves.
Yeah. So we've started to move away a little bit compared to where we were, as far as when the reopening stuff was happening, and we were still so focused on e-commerce. We started to move away a little bit from e-commerce and start to normalize between brick and mortar and e-commerce. And there's the incredible growth that e-commerce saw during the pandemic, and that's come down a little bit. But Meta CFO Dave Wehner said that he expects this to continue, maybe to normalize throughout the middle part of this year. But back half of this year, we're going to start seeing e-commerce grow again.
Yeah, I mean, I agree.
I'm playing FedEx here.
Yeah, I agree with the normalization, right? But it's not going to be the normalization what it was pre-2020. A lot of people have already made the switch in certain areas of their lives to a more e-commerce, mobile, online presence and way of doing business that I believe a lot of those are now just part of how we all interact and do things. Yes, there is this desire of everybody to get out there and be outside again and do all these other stuff, and so there's that aspect as well. And we will get back to a quote unquote more normal shopping and buying and consumer. But that consumer also now has opened up to the e-commerce way, like a charge forward. It took us from where we were pre-pandemic to where we would have been in about 5 to 7 years in 1 year, and it charges ahead.
So now we have this hybrid model where many retail stores are relying on e-commerce, and instead of all of the products coming from a warehouse that you buy online, many retailers have shifted to a ship from store model. So, and that relies on FedEx and UPS, but oftentimes it's FedEx. So I think that'll continue to grow. So this is another reason why I'm buying into FedEx right now.
And I think Tesla's a play in this field too. And here's why: is Tesla's autonomous vehicle trucks. that can run from Arizona to California and back, and they're going to start building out more lanes, and that Tesla's going to make money without having to pay drivers. They're one of the only companies right now that are really pushing forward in this market. They're not the only one, but they are one of few, but they are far head and shoulders above everybody else in the field in the United States. And I believe they're going to lead the way in trucking, and it's going to be, autonomous vehicles trucking these products from one lane to another.
I'm sure. Yeah, absolutely will be. But I think FedEx and UPS will be in that game as well. And they'll probably be buying Tesla or something like it. They'll be buying
can they afford Tesla?
FedEx?
I don't think FedEx has enough cash. FedEx does not have enough cash to
no,
buy
not
Tesla.
buy the company. That's not buy the Tesla vehicles, is what I mean.
Oh, yes. I was just like, what? Buy Tesla? What?
Autonomous trucking will be a thing. It'll be autonomous deliveries, and I think FedEx and UPS will be at the head of that.
Why wouldn't Tesla, if they own the vehicles, they own the rights, or head and shoulders above everybody else, just say, you know what, hey, come to us. You don't need to go to FedEx or UPS. We'll ship it for you.
Because they're going to have to. They would have to branch out and build the ecosystem for the deliveries and all of that. And why do that when you can just lease your vehicles and make the money that way? You don't have the warehouses that FedEx does. It's gonna. FedEx have like a 70-year head start on Tesla. Even Amazon's trying to go this route where they're doing Amazon delivery services, but right now they can only reach mostly metro areas. FedEx reaches everybody, and so does UPS. And for Tesla to go out and then start their own delivery model, that would take years and years and years, decades to catch up with the players.
I disagree about decades, but it would take years. I believe nowadays in 2022, a company with enough cash and enough capital on hand as the might of Tesla there, they can easily in 5 years build that kind of network.
It would have to have a lot of distribution centers across the country, a lot of warehouses, and
5 years.
It would have to be 5 years. I don't know about that, but it's
as someone
Tesla right now. So we're
as someone like me who has worked in logistics for 15 years, it can be done now in 2022 with the amount of cash and capital Tesla has on hand in 5 years.
Okay. Well,
anyways, we're off topic because we're talking about something that will probably never happen.
There's no plans for Tesla to do this. And it's taken Amazon a long time with their delivery. They're so far away from FedEx and FedEx's reach, throughout the entire country. So, and so far only Amazon's doing their own delivery. They're not delivering for every retailer like FedEx is. So let's just summarize here. I've bought FedEx because I believe the cost of oil is coming down. Therefore, their expenses are going to come down. That net profit margin, which is a meager 5%, I'll admit it right now, it's a meager 5%. That should go up outside of a recession. But the recession and oil prices, the two biggest headwinds here, the possibility of a recession and oil prices. Because if a recession hits, it's going to hit retailers first. And that's FedEx's biggest customer is retailers. And so if you start to see a decline in growth there, then FedEx is going to get hit. But over the long term here, I think FedEx is a buy. It's a value play at this point in time while its price to earnings ratio is so low, both trailing and forward. I do see a 47% upside until I sell my stock here. So those were my reasons. But things to look out for: recession, oil prices. But the tailwinds here, declining oil prices over the long term, and the fact that the company's just at a great value. Plus, the future retail is still e-commerce, and it's still ship from store and all of that good stuff.
Nice.
Now, the other thing I had on the docket here, I listened to Meta CFO Dave Wehner on the Morgan Stanley Technology, Media, and Telecom conference call. He says the second half of 2022, Meta will be lapping the issues that they had with the privacy changes. So he did not elaborate on this. He didn't say how much more revenue will grow, but he's saying by the second half of 2022, it should no longer be a headwind. He also says that Reels will start to become a tailwind for revenue rather than the headwind that it is right now. So I'd also say right now, if you haven't already done it, Dave, you got into Meta, you got your 20%. That's great. But I still think Meta has upside and room to run here outside of a possible recession in the medium term.
I do too, but I have a number of long-term positions that I'm currently sitting on, and I want to wait, and because I'm thinking that, we're going to have some headwinds in the short term, and I want to lower cost basis and make more money off of those, and because I believe much stronger in those than I do in Meta.
Yeah.
So I'm getting alleviating that position, taking my 20% gain, which I'm very happy for. Thank you, Brandon, for convincing me on that. And I'm going to use it to help grow other positions and other companies. Like I'll bring this up, was nvda dropped down again recently, and it got a little bit below 240, and I added that to, so I already added it to my personal one, but this time I added it to a trust fund that I help run, and then also send a couple text messages out to close friends and family and said, hey, now would be a good time to get in nvda as it dropped below 240, because that's going to go back up again to at least 280, 300, somewhere in that range, and you could sell and take your money and over and over and over again. Right now with the volatility of the market, it's just like, it's printing money for me right now. Go ahead.
So I've warned greatly in the past 6 months to a year about getting into high multiple companies, but as with everything in investing in the stock market, you really need to differentiate between the stocks that deserve their high multiples and the ones that don't. NVIDIA belongs in the deserves its high multiples category. As well as probably Tesla does as well.
I tell you what, man, people could try and find all reasons why not to own NVIDIA for the long term, right?
Yeah.
But everything we do, just about, you're going to need an NVIDIA chip for. If it has anything to do with graphics or lenses or anything, NVIDIA is going to be involved. And that is just a lot, so much of of the way the world does things nowadays. NVIDIA is just primed to take a big piece of all of that. So I just see that, and then the moves Intel make, like I said, I don't see Intel really moving much out this first year, so I could continue to build my position in Intel. As I throw more money in my accounts, I can continue to build positions, because I see once they get those plants up and running, they're just going to take off, dude. Yeah. They're building plants everywhere where people really need it. They're cutting the supply chain down to nothing, because they're building it right at the point of where we're making it. They're building, a plant right next to all the German automakers in Germany. They're building a plant right here in Ohio. They're building plants right where people need it. And so Intel's definitely, and they're not doing it with their own money, which is even better, right? So yeah, Intel is definitely primed for position that. So I'm sticking with my long-term ones there. I day trade all the time, but my day trades are quick in and out. Like right now, you could probably day trade Apple for between 170, 180, and do it over and over and over again. That would be one I would definitely be looking at, because it's been moving around in that range. And you could just make those short 1% gains over and over and over and over again. If that's the way you want to trade. I've done that before in the past. It's made me success in the past, but you have to watch it if that's what you're doing. We call it channeling a stock. You have to watch it, because at any moment that stock could break out of that channel, whether it's down or up. Yep. You have to really understand the company that you're doing it with. And I would prefer, if you are going to try and do that, do it with a company that, for the most part, if it's going to break out, it's going to break out up, such as Apple.
Pay attention to those Keltner channels, the MACD, all that stuff.
Right. And
I'll be honest with you, the technicals on FedEx are terrible. They absolutely are terrible right now.
So it goes against everything like you always preach. I mean, you're the chart guy. You're the one here with your Bollinger lines and MACDs and all this and
this singles more
200-day moving average, and you break down the technicals, and you're here and you're buying a company where the technicals aren't that good.
It's another value play though. Just like when we were talking about Meta looked like it was going to have more downtrend when you were buying it. But when you have a company that's established and it's at such a great value, then sometimes the technicals don't really matter that much. So to be honest with you, I've got some money sitting aside. If the technicals play out, there's more downside, more capitulation and all that stuff on the stock, then I'll buy more and I'll be fine with that. But it is broken down below the Keltner channels and everything that I usually look at for a short-term to medium-term trade. But this is not that. This is me waiting for what I expect to happen.
Gotcha. And it's always good to keep the cash on hand no matter what. This just for anything.
Yeah, it could take 3 months, it could take a year, it could take 2 years. I don't know. We'll see.
Yeah, you need those diamond hands like our buddy.
Yeah.
Yes.
Saying by name. I don't think he minds.
Our buddy Tristan with the diamond hands there.
I was really surprised what one of the things that sold me here, December 2021 being the most profitable in FedEx history despite Omicron affecting volume. And
well, it's because they couldn't hire anybody, dude. So their labor cost was low, and labor is usually the number one overhead cost to a company.
Yeah, that's true. But they've also got pricing power too, which is another reason why they were able to raise prices by 19% in the past year. So that tells me, yes, they've got competition from UPS and DHL, but it's not that much competition in the market. They're heated between UPS and FedEx, and that's about it right now. Maybe you can count the United States Postal Service here as well, but to be able to raise prices 19% and still keep sales and still keep your customers, you must have a competitive advantage.
Yep. I agree. I'm not going to disagree with you. I know you want me to, but I won't. Nice. So what are you looking forward to going in the future besides FedEx? Anything else that you have on your watch list? I'm talking about watch list, not you're buying or selling right now, but it's on your watch list. What's one on your Disney's on your watch list all the time, really?
I didn't really care for the fact that they just announced that they're building a housing complex, but just because in this environment, I think that you should be more prudent than making new, heavy investments in anything. So I didn't really care for that much, but I still think that Disney's one of those. It's in the same category for me as Apple. You can just buy it and put it away somewhere and not look at it. And
wow, so many people would disagree with you right now.
On Disney?
So you should have started a show with that. We would have had an argument right away.
On Disney.
Yeah, it deserves to be dropping from 180 all the way down to wherever's at. So yeah, it deserves to drop. But I want to talk about one on my watch list that I'm adding to my watch list now, which is Walmart.
You can't just say that and then walk away from it.
I can just say that about Disney. Pull up Disney. I'll pull it up right now.
We're at 132 right now.
Yeah, and it was at 180, and it deserved that drop. It deserved that drop.
Okay. Well, this is where we were pre-pandemic and where we were pre-Disney Plus.
And where we're gonna stay. It doesn't move that much, man. It's like P&G during the 2000s. It's just gonna sit right there.
Hey, my Procter and Gamble's been outperforming the last couple of weeks.
Yeah, I know. That's why I always had to preface it by saying, I have to say the 2000s, because, once they hit the 10s, they said, oh, let's actually start raising the stock price, huh? But Walmart is one I want to keep an eye on here going forward. And it's because of the news announcement that came out today saying that they're going to raise their pay for their truckers up to an average starting pay of $110,000 for their truck drivers for their company and the company truck drivers. Yeah, average starting pay.
Dave, can I get my CDLs online? Is that
right? Seriously. Here's the thing with that is I see them as using an opportunity to go ahead and secure their supply chain.
Yeah.
So that now their truckers are going to be loyal and stay with them because they're getting this nice, huge pay increase Whereas pre-pandemic, I think it was at like it was still the highest for any major corporation at like 80,000, but now it's at $30,000.
You have me looking at something real quick because I want to see what Walmart's net profit margin is.
Right. And so I'm looking at this and I'm thinking, okay, they're going to have a strong supply chain without issues. And, they're still the number one retailer. They're still bigger than Amazon. They still sell more. It's a huge company.
Yeah.
I mean, I don't know, man. I think that's one I'm adding to my watch list and I'm going to keep an eye on. I'm not saying to buy or sell anything right now. I'm just saying it's getting added to my watch list.
And I don't know, maybe net profit, maybe net margin is not the thing to look at, or gross margin here. I mean, it's at 2.43%. It's a net margin right now. I expect it to grow a little bit higher, but that's super low. However, the name of the game with retailers like Walmart is volume, and they have a ton of volume. That's a ton of sales volume. So that 2.43%, it seems low, but that's still a high number of sales.
Their one cashier, man, checks out like 50,000 people a day.
I know. Can I say the best invention ever? The best invention ever is the automated cash lanes. Because I really don't like talking to people when I'm shopping.
Well, all right. So yes.
Less talking I have to do when I'm out, the better, the happier I am as a shopper. I don't want to be there anyways. Walmart's not my favorite place to go unless I'm buying a video game or something, which I don't do that anymore because I get them on my PlayStation 5. So I'm at Walmart. I'm there for groceries, and I'm not a happy person. I'm not having a good time.
The only thing I've gone to Walmart for lately is if I need a certain type of vacuum filter, then Walmart sells it. Or I recently bought Barstool Sports pizza there, just because I want to show my support. And but yeah,
I have a lot of Kroger. Maybe I should buy their stock just so that it makes me happy.
Kroger's going higher. Kroger stock's going higher. That's a company I would buy. That's a company I would believe in.
Everybody called Warren Buffett old and out of his game when he bought Kroger in very early 2020 before the pandemic. And once again, the guy's proven right. He just bought HP. Well, bought more of it. He doubled down on the investment of HP. I think they've got $11 billion in HP now. Somewhere
it jumped 15% on the news. He made like $750 million thanks to everybody else saying, "Oh, Warren Buffett owns it. Let me buy it too." 650 just made Warren Buffett $750 million today.
650, but you're close off the top of your head. You're close. Right. 650. I just read the article on it. I don't know why he did it, but and I don't know if he's got a sour mood on the market like I do either. But you got a billionaire putting money to work, so.
I mean, if I just made 650 million, I would just sell and just be like, I'm happy.
I know.
Just buy stock, tell everybody I own it. Everybody buys it, then sell it. I do want to get into him next week when we get time. I don't know with my schedules and everything, but I want to tease this out there to people who are listening is I told everybody I've been messing around with crypto.com. I got some cryptocurrency things I want to talk about. I'm giving Brandon a week's notice since he doesn't know much about cryptocurrency. It's not his cup of tea. I want him to study up on some things here. So we're going to talk about Polkadot, Polygon, crypto.com, crypto staking. Definitely crypto staking is something we're going to be mentioning again, and go into all these things a little bit more as I've learned a lot more. I've grown in my knowledge of these things, and I want to share that with you guys, my experience and what seems to be working, what doesn't work. So
right now, let me ask you this question.
Go ahead.
The Federal Reserve unloading its balance sheets and trying to reverse inflation. Bitcoin's supposed to be an inflation hedge, right? Is Bitcoin still a buy right now at 43,400?
Who says Bitcoin's an inflation hedge?
Well, that's the whole bull thesis about Bitcoin is that your dollar devalues over time, and over the long term, it has. Ever since the creation of the Federal Reserve back in 1913, the dollar has steadily declined in value year over year on average. And the whole reason for Bitcoin's existence supposedly is to put your money into something that values higher over time. Because
I disagree with you right there. Like we're gonna have a discussion next week, guys. You can hear this out because him and I are gonna argue. Well, you and I are gonna argue about this because that is not the reason I have had for investing in Bitcoin, and that's not the reason anybody I know has had for investing in Bitcoin. That's the reason that people. That's the reason people say who don't invest in Bitcoin.
Okay, so what's the reason?
So I mean, the reason for using Bitcoin is because you don't trust the government, and no government controls Bitcoin, and you want to be able to move your money around without government interference, without government getting involved, and without the government stepping in and telling you and charging you fees, or banks charging you fees. Just move it with Bitcoin.
But you also, isn't a part of that at least that the Federal Reserve manipulates money by cutting rates and raising rates and cutting rates again and raising rates again, and they want to get away from that, so they want to put their money into something that is
that's a very small part if you're over analyzing it, but nobody who uses Bitcoin and regularly over analyzes it like that I'm aware of.
But isn't that the reason why it's so hard to mine and why you have limited supply of it? Is to control the value.
Yeah, it's to control the value, make sure the value goes up, because you have a limited supply. You're never going to get any more, and so it keeps going up as more and more people use it.
So if the Federal Reserve gets their way and the value of the dollar starts going up, then does that mean that the value of Bitcoin goes down a little bit?
It shouldn't. No, shouldn't, because the supply of Bitcoin stays the same. It never gets any bigger. And people are going to continue to not trust the government as around the world, not just here in the United States. Because remember, I covered this in one of our podcasts, is how the Bitcoin really skyrocketed from when it was at like 150, 200 bucks a coin, or 300 bucks a coin. And, the Cyprus government failed.
Yeah.
And the people of Cyprus had to move their money out of the banks, and they bought Bitcoin. And it just started shooting up because they wanted it in something that, the government couldn't get their hands on, because their government had failed their banking system, and the whole country just failed. And so the people started putting in that. Then all of a sudden, other parts of the world, the people who were quote unquote the hackers, and people who watched all these the computer networks and were, socially using Bitcoin, started seeing this. They started piling more money, and then it started making headlines, because now Bitcoin was at like $1,500, $2,000 a coin. And that's what really started it. So the whole start of the big boom of Bitcoin was because the government failed the people.
I think the government here fails with the banks.
Right? And that's why, we're going to go into this next time, but that's why crypto staking is such a big deal. And that's why, using cryptocurrencies, because Brandon, if you need a loan or something, you could come to, your buddies and we could just cut out the banks.
Yeah.
Yeah. That's the way I like it.
I've bought bank stocks and I've traded them medium, maybe, mostly short term, but medium term at the longest. But I generally don't buy and hold the bank stocks for very long for the same reason, I guess. I don't know if you could tie two together.
We'll talk about it next week. That's our teaser for next week. Final thought for today, man.
You know what? Yes, I'm bearish short term to medium term on the U.S. economy, but I'm not long term bearish. I don't think I ever will be long-term bearish on the U.S. economy. Well, whatever lies ahead, we will get out of. If I didn't think that way, I wouldn't be on this podcast. I wouldn't recommend buying FedEx of all things. And maybe I would be on another podcast competing with the Peter Schiff show and trying to sell you gold. But, and gold does have a position in your portfolio. Don't get me wrong, but you see what I'm saying, right? I'm long-term bullish on the U.S. economy. Whatever happens in the next year, we'll get through and we'll be just fine.
There you go, man.
Even if you Hey, even if you bought in 2007, going into the 2008 recession, those people probably didn't hold, unfortunately. But if you did and you kept your wits about you, then you'd be fine right now.
You would be fine right now, but that you got to have a long-term view of the markets in diamond hands.
Yeah, unless you bought Lehman or Bear Stearns.
Yeah,
But,
which I did buy some Lehman during that time.
well, you know what? You probably also had some other things that worked out for you. During a recession, you buy your consumer staples and you buy your big brands. You buy your Coca-Colas, you buy your Procter and Gambles, and you buy your Apples, and you'll be okay.
All right, guys. Final thought from me is take your time, stick to what you know. Don't go out of your way. For me, it's I know NVIDIA, I know Intel, I know the chip makers, I know the oil stocks. So I stick to what I know, and it makes me money. Continues to make me money. I don't need to try to find the newest thing, even though I am going to talk about crypto. But I am messing around with it, and I feel like I'm getting a good handle on that. So I'll tease that for next week. We hope you've had a good night. We hope we've been entertaining, educational, and uplifting because we want everyone to make money.
Discussion.
Have a good night, guys.
Have a good night.